In this video, we are going to discuss few MCQs on joint products for CMA US Part 1. Before starting with the questions, let's quickly discuss what is a joint product. Joint product refers to two or three products or two or more products that are produced from the same process. For example, let's say we have a process, and as an output for this process, we get three products, product A, B, and C. And all the three products have significant sale price or significant market value. Then we call all the three products as a joint product. So joint products are those products that are produced from the same process and they have significant market value. What if they don't have significant market value? For example, let's say as a result or as an output of this process, we get product A, B, and C, but only product A and B have significant market value or a significant selling price. But the market value of product C is, let's say, it is very insignificant. So we call product A and B as joint product, but we will call product C as a byproduct. Why product C is called as a byproduct? Because it does not have significant market value. However, in this video, we are going to restrict our discussion only on joint products. We are not going to talk about byproducts in this video. And there will be some costs that are incurred commonly for the joint products. In this case, for example, let's say product A and B are the joint products. There are both product A and B are produced from the same raw material, and we will also incur some common costs that are incurred for producing both product A as well as product B. Now, this common cost is incurred for producing both product A as well as B, right? So this common cost should be shared between product A as well as product B. Now, how to share it? What should be the allocation basis for that? So the common costs should be shared between product A and B using different methods. The first method is we can share it using physical quantity method, or we can share it using the gross market value method, or we can share it using the net realizable value method, or we can share it using the gross profit margin method as well. So these are the four methods that are used for sharing the common cost or allocating the common cost to the joint products. So in this video, we will discuss all the four methods of allocating common cost to the joint products. So let's start with the question. Question number 1. All of the following are methods of allocating joint costs to joint products except. So they are asking which one of the following is not a method for allocating joint costs or common costs to the joint products. We already discussed physical quantity is one of the methods that can be used for allocating joint costs. Gross market value is a method that can be used for allocating joint cost or common costs. Net realizable value is also a method that can be used for allocating joint cost or common cost. But there is nothing called separable production costs method. This is not a method that is used for allocating joint cost to joint products. So option A is the right answer. Question 2. The principal disadvantage of using the physical quantity method of allocating joint cost is that. So we know that the joint cost can be allocated to the joint products using physical quantity method. But there is a disadvantage associated with this method. What is the disadvantage? Additional processing cost affect the allocation basis? No, there is nothing like that. Additional processing cost will not affect the allocation basis. Physical quantities may be difficult to measure. No, it is actually easy to measure. Physical quantities are nothing but the output in terms of units. So it is actually very easy to measure. So option B is not the right answer. Joint costs by definition should not be separated on a unit basis. There is nothing like that. Joint cost can be separated on the basis of number of units. So option C is also not the right answer. Look at option D. Cost assigned to inventories may have no relationship to value. What they are saying. For example, let's say as a result of the process, we get two products, product A and product B. Both the products have significant market value. So we can call both product A and B as joint products. Product A is both product A and B are joint products. Let's say we have produced 1,000 units of product A and 10,000 units of product B. Let's say the common cost incurred to produce product A and B is 1 lakh rupees. So this 1 lakh is known as the joint cost or the common cost. It is the cost incurred to produce product A as well as product B. Now, if you are allocating the joint cost on the basis of number of units produced, what will happen is, or else let me do one thing. Let's take this as 1 lakh 10,000. 1 lakh 10,000. So then the calculation will be slightly easy. So 1 lakh 10,000 is the joint cost, which is incurred for producing 1,000 units of A and 10,000 units of B. Now this 1 lakh 10,000 rupees should be shared between product A and product B. If we are allocating the cost on the basis of number of units produced, how many rupees will be allocated to A and how many rupees will be allocated to B? So totally the company produced how many units? 1,000 units of A and 10,000 units of B. So totally they have produced 11,000 units. Out of these 11,000 units, 1,000 units is product A into 1 lakh 10,000. So how much do we allocate? 1,000 by 11,000 into 1 lakh 10,000. We get 10,000 rupees allocated for product A and remaining 1 lakh rupees will be allocated for product B. Now, what is the problem with this method? For example, let's say product A can be sold at a price of $100,000 units, and each unit can be sold at a price of, let's say, rupees 100 per unit. So this is the market value or the selling price of product A. But product B can be sold at a price of, let's say, rupees 1 per unit. So from by looking at the selling price, we can come to a conclusion that the value of product A or product A is a complex product, right? But product B is a very simple product. That is the reason why it is sold for $1 per unit. But product A is a complex product. That's the reason why it is sold for $100 per unit. So in this case, what will happen? Actually, we should allocate more common costs for producing product A because that's a complex product. So that would have consumed more resources. So a huge portion of cost should have been allocated to product A, but we are allocating only a lesser amount of common cost for product A. So that is the reason why they are saying cost assigned to inventories may have no relationship to value. What is value? Value is nothing but what is the value of product A? 1,000 units. Each unit is valued at 100. So value is 1 lakh. And what is the value of product B? It is only 10,000 units valued at rupees 1. So it is only 10,000. So value of product A is 1 lakh, but the cost that we have allocated under physical quantity method is only 10,000, right? So the cost assigned to inventories does not have any relationship to the value. So in such case, where one product is very complex and the other product is very simple, or there one product has a higher amount of value and the other product has a lesser amount of value, we cannot use physical quantity method for allocating the joint cost. So option D is the right answer. If we are using physical quantity method, the disadvantages sometimes the cost assigned to inventories may have no relationship to the value of the product. Third question, The primary purpose of allocating common cost, the primary purpose of allocating common cost and joint cost are same. The primary purpose of allocating common cost to joint product is to determine what? It is to determine the selling price of a product. No. It is to determine the inventory cost of joint products for financial reporting. Option B is the right answer. What is the purpose of allocating the common cost to the joint products? Here we have 1,10,000, right? That 1,10,000 is allocated between product A and product B. Basically, the joint cost or the common cost is allocated between the joint products. Why we are doing it? It is used for measuring the inventory. It is used for determining the inventory cost of joint products for financial reporting. What is the amount of inventory that we should show on the balance sheet, on the asset side of the balance sheet? So for determining that amount, we are allocating the common costs. Whether or not one joint product should be, whether or not one of the joint products should be discontinued, no, that is not the reason. And the variance between budget and actual common cost is also not the reason for allocating common cost. The reason for allocating common cost between the joint product is to determine the inventory cost of the joint products for financial reporting. Fourth question. In joint product costing and analysis, which one of the following cost is relevant when deciding the point at which a product should be sold to maximize profit? What they are saying here is, see, for example, let's say as an output to the process, we get two products, product A and product B. Let's assume both the products have significant market value. So we can say product A and B, both are joint products. Now, at this point, both product A and product B can be separated, right? So we call this point as the split off point. So split off point is the point where the joint products can be separated. Now, product A is separated and product B is, both product A and B are separated from the common process. Now, what is happening? For example, let's say product A can be further processed into a new product called product C, and product B can be further processed and it can be processed into a new product called product D. Now we have to decide whether the product should be sold at the split off point or we should further process the joint product and sell the new product. We have to decide that. Sometimes what will happen? The products may not have a market or the products may not have demand at the split off point. For example, let's say the customers are not ready to buy product A because there is no demand for product A at the split off point. In those cases, what we are supposed to do, we have to process it further. We have to process it further into a new product, right? So what is important is at split off point is the point where joint products are separated and these products can be further processed into a new product. So the requirement of the question is, while deciding whether to sell it at the split off point or whether to process it further, what are all the relevant costs? So in such cases, see, we are deciding whether to process it further, right? So from here only we are going to decide whether to process it further or whether we can sell it. So for a cost to be classified as a relevant cost, it has to meet three conditions. It should be a future cost, incremental, and it should be a cash flow. Any cost that you have already incurred in the past, any cost that you have already incurred in the past is known as a sunk cost, or it is a historical cost, which is not a relevant cost, right? So any cost that you have incurred till the split off point is a sunk cost. Why it is a sunk cost? Because from here only we have to decide whether to process it further or not. So any cost that is incurred till the split off point is a sunk cost, which is an irrelevant cost. So any cost that you are going to incur further, any cost that you are going to incur after the split off point is a relevant cost, right? So now let's look at the options to identify which of the following cost is relevant when deciding the point at which the product should be sold to maximize profits. Separable costs after the split off point. We will read the options and then we will discuss it, or else we will read it from option D. Purchase cost of materials required for the joint products. Now, Purchase cost of raw materials required for the joint products. This is obviously a sunk cost. You have already incurred it. Now you cannot influence it, right? So this is the sunk cost. The price at which you have purchased the material is a sunk cost. You have already incurred it. It is a past cost, historical cost, not relevant. Joint cost to the split off point. So any cost that you have incurred till the split off point is irrelevant. So this is also a sunk cost. It cannot be influenced, irrelevant. Sales salary for the period when units were produced. So again, here by looking at the terms itself, we can see units were produced. Sunk costs, past cost or historical cost, irrelevant. Separable cost after the split off point. So any cost that you are going to incur after the split off point is a relevant cost because it is an incremental cost or future cost, something that you're going to incur in the future or something that can be influenced. So option A is the right answer. So what is the relevant cost in joint product? Or what is the relevant cost in deciding whether to produce the product further or to sell it at the split off point? The relevant costs are those costs that are incurred after the split off point. Any cost that you are incurring up to the split off point is irrelevant. Any cost that you are going to incur after the split off point is relevant. Look at question number 5. Sonimat Sawmill manufactures two lumber products from a joint milling process. The two products developed are MSB, mine support braces, and unseasoned commercial lumber. So basically what they are doing is, Sonimat Sawmill is the company. They are producing two products from the same process. So this is the process. As an output for this process, we get two products. One is MSB, which is mine support braces, and the other one is CBL, commercial building lumber. A standard production run incurs a joint cost of 3 lakh rupees. So for producing both product MSB as well as CBL, we have incurred a joint cost of 3 lakh. So this 3 lakh should be allocated between MSB and CBL, which results in 60,000 units of MSB and 90,000 units of CBL. So we have produced 60,000 units of MSB and 90,000 units of CBL. Each unit of MSB can be sold at a price of $2 per unit, and each unit of CBL can be sold at a price of $4 per unit. So $2 per unit is the price at which MSB can be sold, and CBL can be sold at a price of $4 per unit. If there are no further processing costs incurred after the split off point, what does it mean? It means that after the split off point, we are not manufacturing or we are not producing the products into a new product further. So there is no further processing cost. The products are sold at the split off point itself. The amount of joint cost allocated to MSB on a relative sales value basis would be how much? So here, the 3 lakh rupees is the joint product. So the 3 lakh rupees is the joint cost, which is incurred for producing both MSB as well as CBL. This 3 lakh should be allocated between MSB as well as CBL, right? On what basis it should be allocated? It should be allocated on the basis of relative sales value. So what is the sales value of product MSB? 60,000 units, and sales value of one unit is $2 per unit. So total sales value will be 60,000 into 2, we get 1,20,000. For a product CBL, 90,000 units are produced, and each unit can be sold at a price of $4 per unit. So what is the total sales value? 90,000 into 4, we get rupees 3,60,000, and this is 1,20,000. So what is the total sales value? It is 4,80,000. 4,80,000 is the total sales value. They are asking us to calculate the amount of joint cost allocated to MSB only. Only for MSB. What is the sales value of MSB? It is 1,20,000. 1,20,000 is the sales value of MSB, and the total sales value is 4,80,000 into what is the joint cost we get? It is 3 lakh rupees So the total sales is 4,80,000, out of which 1,20,000 is coming in the form of MSB. So 1,20,000 by 480, we get 25%. So 25% of the sales value is contributed by MSB. So 25% into 3 lakh, we get 75,000 is equal to 75,000. So option B is the right answer. So out of 3 lakh rupees, 75,000 should be allocated to MSB. And what is the remaining amount? From 3 lakh, 75,000 is allocated to MSB. We are left with 2 lakh 25,000. The 2 lakh 25,000 should be allocated to CBL. So this is how the joint cost should be allocated between the joint products using relative sales value basis.